Hello traders, welcome back to my channel again. Um, Today's video we are going to um, take a quick look on your charts. Um, the chart patterns are designed to get you broke. The chart patterns are not what you think they are. Um, they are basically uh, created by the banks or whoever manipulates the market. Um, the flags, the triangles, the pennants, the head and shoulders, um, trend lines, all these chart patterns are created for one purpose, and that purpose is to get you stopped out on the trade that you have taken. So the banks know that you trade the flag patterns. For example, when you get a bearish flag pattern, they know you're gonna go short at the breakout of the pattern. Um, so when you go short, what do you think they're gonna do? They're going to go long, yeah, because they've created those patterns to get you taking the trade when you are not supposed to be taking that trade. Yeah, I will show you many examples on this video. So the way I trade is I trade um, the stop ons. So basically, because I know how the banks trade, I go with the bank. I trade with the bank. Okay. So I know the trades you're taking, and I know where your stop losses are, and I know what you are doing when you're doing it. And I just basically do what the bank does best. Yeah, to take you out and then take the trade. Okay, so today's video I will show you chart patterns and show you how they trick you to go the wrong way. Okay, so let's do it. Right, so the first chart we're going to look, the first pattern we're going to look at is the so let's start from the beginning. So let's start from here. Okay, so right here we had this head and shoulder. There and then there. So this is the head and shoulder. Okay, and was created, when this head was created, we had this equal highs here. Okay, so we had multiple bounce, this bounce here, that bounce there, that bounce there, and that bounce there. Okay, and then let me get rid of this. Okay, so we then had this breakout. Yeah, so remember in my previous videos I mentioned that we have three types of traders. You're either a level trader, a breakout trader, or a retracement trader. So as you can see, this was a clear breakout of this level. Yeah, this was a clear breakout. And what happens when you have a breakout of these chart patterns like this? You go long. Okay, but remember, when this head and shoulder was being created, you have no idea what was happening. Okay, So then once we had this breakout, you went long and you're going long on a supply zone. Yeah. So again, this is how I trade. I look out for patterns like this. So when I see this left shoulder created, I know that it is a possibility that that's what the bank is doing. And when I saw this high being created, and then we had the supply zone there, all I need to do is to wait for a chart pattern like this, a, a, a double double tops or a chart patterns like this, and then I know that when there's a breakout, people are gonna go long into the supply zone. Yeah. So if you've gone long there, your stops are gonna be below this this chart pattern, below the chart patterns, and you have been taken out. Okay, so that's the first one. So the second one is a bearish pennant, which is a continuation pattern of this short move here. Okay, so what happened was we also had a breakout of the pennant pattern, breakout to where? To this demand zone right there. Yeah, you can see rally, rally base, and a big rally out of the zone. So when this breakout occurred with a big bearish candle, many are gonna go short. And you had another confirmation of a lower close of the red candle. So two confirmations, and you went short. Where's your stop gonna be? Stop gonna be above here or above this above the pennant. Yeah, price came into the demand zone and then got you stopped out. Okay, so that's the second one. Um, the third one we're gonna look at is the bullish flag pattern, very popular chart pattern. Um, so we had the um, the level created, yeah, the pattern created. Then we broke out, yeah, with this big bearish candle into the demand zone, yeah. And what happens? The price moved back up. You see, if you've gone short at the breakout, where is your stop gonna be? Above the level of the chart pattern, right? What happened? It took you out. The next one we're gonna look at is this bullish pennant. It formed, yeah, here. It broke out. You've gone short into a demand zone. Price came into the demand zone. It went up. Okay, so you are told to trade these patterns whenever there's a breakout. And then we had this bearish flag pattern, which is a continuation of the short move down here. Yeah. So if you have gone short at this breakout, yeah, because with this candle, that's a confirmation. This big bearish candle, that is your confirmation. So if you've gone short at that confirmation, where would your take profit be? Just gonna get my tools 1 second. Yeah, so if you've gone short right there at this breakout here, yeah, where will your stop be? Sorry, your TPB. You're gonna be targeting. Look at that low. You're not gonna be taking your profit at that low. Yeah, that is too small of a level of a profit to take because your stop is going to be here above the level. Sorry. Yeah, so if you've taken the short at the break here, your stop are going to be above this level, and your TP cannot be here because of the distance from here to that low is not a good profit based on your stop loss. So you're going to be aiming that low there because that is the nearest low. Yeah. So if you have a look, you so this is where you're going to be taking your profit. As you can see, the market did not actually get to that low before it moved back up. Yeah. So if you've taken this short, you are going to be holding on to your short trade because most likely your profit is going to be below this low or even that low there. Yeah, because this is a bearish flag pattern, it's a continuation pattern to the downside. So you're definitely going to hold your trades because this is too um this is the short. There's no profit margin if you've taken short there. You're not going to be targeting that low. This is the low that you're going to be targeting. Yeah, and as you can clearly see, price did not get to that low before it formed this falling wedge. Yeah, when we had a falling wedge, we broke out, and this happened last week. We broke out, and if you're short on this trade, your stop is still above the level. And what is above this level? Supply zone, right there. Yeah. So what I think is going to happen next week is price is going to rally up into the supply zone and then drop because they need to take the stops above here, above this bearish flag. Okay. And if you've gone long at this breakout, your stops are below this level, below the falling wedge. Yeah. And your TP, you're going to be targeting this high. Yeah. So I do not anticipate this to move up to that high. So if you go short here, your stop should be above, just a few pips above this high, in case they want to break the level. But I don't think they're gonna break the level. Why? Because there are stops above this level that they need to come for. Okay, because they've not come back. They've not come for this since this broke out. They've not returned to get rid of the shorts, stops rather. Yeah. So we broke, and you took the trade. You're still on the trade. Most likely, 90% of the people that took this trade are still in this trade. Why? Because they've not taken off their profit. Yeah, we know, or I know for sure where your TPs are. I know for sure where your stop losses are. Okay, because I trade like the bank trade. I understand their concept. I understand what they do. You have to know how to read the charts. I know what they do. I know their trademarks. Yeah, I know what they leave. You need to understand. Once you understand what they do in the marketplace, trading is so easy. But first of all, you need to learn how to read the chart like a professional. Okay, so stops are above here. When price broke, the bearish flag, which is a continuation pattern to the downside, they've not come back to stop hunt the high, the stop losses. Okay, so next week they are going to come back. They're nearly there. They are there. Actually, they are there. So they've just broken a little bit high above this flag. Okay, but they need to come, make sure they get rid of all the stops, and then get into our supply zone. And then that is where you look to go short and put your stop above the high, and then take a profit below this low because there are stops also here. Okay, so if you look at the previous ones that we've looked at, you will see that they came and hunted the stops. If you go short here, stops are above here, they came for it. If you went short here at the breakout, your stops are above here, they came for it. If you took this one, they broke out, your stops above here, they came for it and they got it. And then if you took this breakout, your shorts, your stops are above this level, this low, they came for it. Okay, so this is how they do their business, and this is why you can never be profitable trading the way you trade. I don't care the guru that taught you how to trade. I don't care the course you bought. I don't care how many years experience your mentor have. I have no doubt that as long as they trade the way we all know how to trade, you are going to lose money. If you trade the way you are currently trading, you are going to lose money. You have to change the way you trade. The chart patterns are created to get you broke. Supply and demand cannot be traded. You cannot trade supply and demand on its own. Supply and demand is a fantastic concept, but should not be traded on their own blindly. Using an indicator is a disaster. Okay, the only way you'll be profitable is if you understand how the banks manipulate us, the retail traders. I've been doing this for so many years, but I recently developed the skills of reading the charts like a professional, like the bank does. Watch my previous videos. There are different methods, different ways that they manipulate us. What I've showed you today is one of them. Okay? There are other ways. Your trend lines, your equal highs, your equal lows, your head and shoulders, everything that you know about trading. We were all taught how to trade, but the wrong way, not the right way. Okay? What I've showed you today, look closely at your charts. You will see this happen day in, day out on all time frames. The chart patterns are everywhere, and they're just doing one thing, just to get you on the wrong side. Okay? So watch this video over and over and over again. Share it with your friends, share it with your family. You are helping people. I'm doing this because I want to make sure that you start recovering all your losses. Okay? So share this video with your friends, with your family. Um, you know, feel free to post this anywhere you like so that a lot of people watch it and understand that chart patterns should not be traded on their own. Look for supply and demand zones above or below those chart patterns. Yeah, that is where the banks wants to do business. Okay, so I'll leave this here. And until I do the next one. Thank you so much, and trade safely. Take care. Bye bye.